financials of the company. So coming to an industry overview, pressure shipping is part of the dry bulk tramp freight market, and therefore we don't carry any containers, nor do we carry any liquid cargoes. As you can see, the dry bulk market is split up into different size ranges, and pressure shipping currently is in the small handy size sector of the market. We also have some ships on order in the Supramax sector. This is a snapshot view of the company. We currently own and operate 21 ships. The average age is 15.5 years. The insured value or the market value as of the 1st of Jan of this year was $327.5 million for these 21 ships. The book value is about $210 million. So there is about $115 odd million of hidden reserves in the balance sheet, which is not shown anywhere. The average size per ship is about 25,000. Now what I have for you as a footnote on this slide is how to show you how these values have changed over time. That if you were looking at the same 19 ships to begin with, because we added 2 ships during 2010, if you looked at the values of these 19 ships in the 1st of January 2007, they were worth $377 million. Then that value jumped in 12 months' time to $641 million. Then that value collapsed to $224 million, and then it has risen at the beginning of last year at $296 million, and has now continued to rise further to $327.5 million. So asset prices in shipping are extremely volatile, and you should be ideally buying the ships when asset prices are low. This is a 25-year view, 26-year view of the Baltic Dry Index. It shows you how the market has behaved in a very narrow band between 500 points and 2,500 points between 1985 and 2002. And thereafter, since 2003, the market has fluctuated quite excessively. We've had a high of 11,793 points on the 20th of May 2008, and we've also touched in the same year on the 6th of December, we've come down to as low as 663 points. If you were to average out the BDI, you would see a more cyclical position where the low point of the cycle would be 2002, rising to a higher point in 2004, before falling down in 2005 and 6, then once again reaching a new peak in 2007 and 8, and then falling in 9 and 10. We think that 2011 and 12 will be similar years where the market will remain low before it starts to once again rise in post 2012. This is a breakdown of the dry cargo market space into the 5 major types of cargoes. There's iron ore, there's coal, there's steel, there's grains, and there's minor bulk. Now, if you look at our size and type of ships, we mainly carry the steel, grains, and minor bulks. We don't carry iron ore and coal, which is carried by the very large ships, mainly the Capesizes and the Panamaxes. This slide is a little dated. We are hoping that we should get a revised picture in the next few weeks when we would see how these numbers have changed during 2010. But the estimate for 2010, which was given at the beginning of the year, was that iron ore would be 36% of the market size, coal would be again 36% of the market size, steel would be 7%, grains would be 13%, and minor bulks would be the balance 8%. So that would be the breakup of the demand side of the dry bulk market. If we were to look at the BDI on an annualized basis to see if there are any seasonal patterns that emerge, then you would see that very clearly between the months of July and October, the market would have a seasonal fall before rising again. Now, the reason for that was twofold. One is that industrial production during the months of July and August in the OECD countries slows down significantly because of the annual holidays. So, raw material supply going into the factories a month or so before the holiday season and a month or so after the holiday season is at a low point. The other factor that affects the seasonality is the flow of grain. As you remember, grain is 13% of the market share of dry bulk commodities. And if you see the months of July and August, there are hardly any grain shipments taking place at all because the northern hemisphere grain movement only starts in end September, early October, whilst the southern hemisphere grain shipments complete by the month of May, June. Now, if this is of course a picture between 1985 and 2009, but if we were to split this into two pictures and look at the period 1985 to 1999, which is the blue line, and then look at the pink line, which is from 2000 onwards, you would see quite a different picture emerging. Now, the impact of China industrializing and becoming a rather large player in the dry bulk market is quite evident when you look at the seasonal pattern that emerges during the months of July, August, September and October. Prior to China being an industrial power, when OECD were very important, you can see how this index has come down in the months of July and August on a very regular basis. But since China has become an industrial power, the only impact on a seasonal basis is from grain. Grain movements slow down whether China is an industrial power or not, because grain movements don't take place during these months. So you can see that there is a slowing down of the market during that period of time. But if you look at the left-hand side of the slide and look at the month of February, which is the Chinese New Year month, you can see how sharply there is a fall in industrial commodity movement during that period of time, because China is so important. But it is a sharp fall and it rises back very quickly because China takes a holiday period of about 10 days during that period of time. Coming to the supply side picture, as of the 1st of January 2011, the total deadweight tons of ships in the world in the dry bulk market had reached a grand total of almost 555 million deadweight tons. This is an increase of almost 16% over the figure that was there a year earlier. And just to put this in context, the growth in the past has varied between a low of 2% and a high of 8%. So 16% is really excessive. If we look at the forward position, you can see that in 2011, there's another 25% of ships that are on the order book and are supposed or scheduled for delivery during that period of time. 2012 is not much better, it's still 18%, and then the order book tails off. Now, what are the factors that can affect supply? There are two factors that can really affect supply. One, of course, is scrapping, where you permanently remove supply from the market. And the other one is where you postpone or delay delivery of the new ships. This would be known as slippage. So looking at scrapping first. If you look at scrapping and look at the year 1986, you can see during that period of time, the average age of ships that were sent to the scrapyard were as young as 15 years. If you fast forward to 2009, which was again a